All right. Hey guys, welcome. Has been life. Hope everything's been good for you. So today we're gonna keep working with our back testing, right? Today I'm bringing today two topics. So the topic of the last week, let's say, the last back testing session, that it was the range and liquidity. Now I'm gonna add or gonna zoom up to this something very interesting, which is the order blocks, right? How valid they are. So this is where you're gonna keep working for today, right? So first of all, I'm gonna explain briefly how is the range pattern we have to see in the market, and then how we're gonna keep introducing the order blocks concepts. Because today we're not gonna do actually back testing, but we're gonna try to analyze the market and understand why and how the price reacts or it doesn't. Why the price reacts or it doesn't, according to this concept we're gonna explain today, right? So range and liquidity. This is the first thing. So remember that we discussed last class for 6 steps, but today we're gonna just summarize it to put it just four. So the first one is that we need to find a very clear and obvious pattern, right? You know the pattern I'm talking about. This is a pattern. So first we have like certain accumulation, then we have a liquidity intake, and then we have a breakup structure, right? Some people call it this like accumulation. I don't know how they call this one, and then they call the other distribution, something like this, right? But this is the pattern we're looking for, in other words, right? In the smart money concept, we don't name it. We just have the liquidity take, which is this one. All the liquidity has been taken, so all the money that is being there, trapped in these lows, right? On this consolidation, is taken by this low. Is taken by this, by this downtrend or this impulse, down impulse, and then after that we have a breakup structure, right? So the breakup structure, uh, we can confirm the beginning of a new range, right? And with this information, we can understand that this low becomes something that we call as well like a strong low or strong high. In this case, it is a low because we're in a bullish example, right? And it means that this low will be highly respected. So the probability that the price continue with the uptrend are high again because we're in a bullish impulse, right? Once the price breaks this low, we can find a market shift or a change of direction. But there will be more other concepts that we're not going to discuss so far today, right? Now, this is a clear pattern that we're looking for, right? Clear and obvious pattern. This is the pattern we're looking for. Now, second, order flow. Clear and obvious. This is optional, right? But order flow refers that so the price sometimes has a result of this reaction, right? Most of the times when the price make this movement or this pattern we're talking about, it's because it reacted, sorry, it reacts in a previous order block, right? And this is called order flow because it means that there is like a continuous mitigation of order blocks, um, and it means that the price is being efficient, right? So this is the thing. And now this is the second confluence. This third confluence is called that it breaks the structure with a candle of the body of the highest high or the lowest low or the previous range, right? So when I'm talking about in a previous range, I'm talking about the next this. So this is a range. This is what I'm marking here is a range, and this that I'm marking here is a new range beginning, right? So when I in this third rule, it says that it breaks the structure with a body of the candle of the highest high. So this high that I mark here is the break of the structure, the boss. And it says the first breakout is a change of character. Change of character means, in other words, that the price is simply showing signals that it's that in this example the bullish market is stronger or the intention to buy is stronger, right? So this boss, of course, it should be with a body of the candle. um I call it change of character, correct? And that's what it means, right? Now if we have a church, it doesn't mean that the price can continue, because let's imagine the next. Imagine that the price simply do not break this high, goes down, and it means we don't have actually a range here, right? And the price can simply do the next with a small candle wick, boom, took the liquidity of the high and boom, changed the direction of the market. This is what it means. That's why we actually need a clear and evident break of the highest high with a bottom of the candle, and then we have a real clear confirmation of a new range beginning, right? Which will be this. From this, it will start. And then after the boss, the market shifts. So after the boss, I mean, after this boss, okay, of the market shift, right? We pull back. So we go and we look back, and then we look for two things: liquidity intake, which is this one, right? Liquidity intake, right? Previous liquidity intake of the order block. Let me write it here, like liquidity intake of an order block, right? Perfect. Then previous liquidity, of course, this is the previous liquidity, and then a breakout, right? And with that, with this fourth step, this analysis, we can actually find our strong low. If you haven't seen our previous video, my previous video, there we have this what I'm explaining, because we keep analyzing the market and just finding this fourth point, which is like market shift, we pull back, look for liquidity, check of an order block, previous liquidity, breakout, and the pattern, right? So this is what we're gonna do today as well. But now we're gonna introduce a new thing or a new concept, right? Once we got this, let me introduce a new concept I want to discuss with you in today's lesson, right? So this is clear, I hope so. Right, order blocks. This is the new topic we're gonna talk today, right? The beautiful order blocks topic. Now, I'm talking about the order blocks, and you need to understand this. If you don't know what is an order block, guys, I kindly suggest you to watch my one of the videos I have here in the channel, one of the first in which I talk about order blocks and I define them. And there I actually explain to you how it works and what they are. Because today's I'm talking about like advanced class of order blocks, right? And if you don't know this, the idea is that you uh, first watch the basic concepts, and then we go to the more advanced like this one, right? Now we're gonna take we're gonna bear in mind the next this, which is the order blocks. Okay, we're gonna with this we're gonna understand when an order block is valid or is invalid, right? So because in the market there are thousands of order blocks, and you may get confused about this concept once you understand it. But there are some of them which are valid, and all some of them that are not valid at all, and we need to train our eye to perceive which are valid or not. So this is the thing. First of all, what is an valid order block? Here is 5 steps. One, if you don't have a range or a clear range, right, you don't have an order block. So if you find an order block out of a range, bro, that order block you shouldn't bear in mind, because it's out of a range, right? You cannot actually work with it. A proper order block should have right order flow. We already explained that concept. The third one is that it needs to have pre-trade liquidity. It means that it should have um, liquidity prior the existence of it, right? It means we're gonna see it in a minute, right? And then it to have a better confluence, it should have an imbalance. Also, in the order block class, I explained the imbalances, and then that and the last one is that it lacks liquidity below or above the same, right? It depends. So let's do the next. I'm gonna do this example again, like theoretically writing it, and then we're gonna watch it, right? So let's keep analyzing the next. Right now, like we're gonna imagine for the sake of the example that here is an order block right here is an order block right now. We need to understand the next. If we don't have an order block, if we don't have a range, we don't have an order block. So do we have a range? Yes, we do. So we have this one, right? Perfect. Now, order flow. Does exist order flow? Yes, it is. So it's not there is an order flow because first the price react on this order block, which was here, and now it provides us a new order block which is not mitigated yet. So we have order flow. Perfect. Number three, pre-trade liquidity. So in the smart money concepts, if you can see close to the order block, it must be like candle wicks, like something like this. Some attempts attempts from the price to get to the order block but don't actually mitigate it. So these retracements that you are seeing here means that the price is getting closer to this and creating false lows, let's say, or structures, false structures in which most of the retail traders fall into. So, for example, people start thinking that this is I'm gonna talk like this, like a resistance levels, yeah, like a support area, support resistance. I don't remember this before. So, like a possible low or possible pivot points. So, some traders are actually waiting something like this, a reaction like this, right? Or some others like a reaction like this, right? And what they don't know is that the price is actually creating liquidity, so money to get trapped on these areas, right? And this is the third concept we're going to discuss. So it's an imbalance. An imbalance, as you will know from the explanation that I said to you before, is a gap and a space between candle wicks, right? So in this example we will have the next, we will have an imbalance. We have prior liquidity, which is this one that I'm marking here, right? We have an imbalance, so it means a space, a gap between the actual order block and the current price, and then that it lacks liquidity below. So ideally, right, in this example, we have this order block, and below this order block there's no liquidity, so there's not multiple candles, or there's not like a lot of like retracements before of this, prior this order block, because if it has it, it would make this order block invalid. Gonna put this into quotations, right? Because it can work, right? Or it may work, it depends on the reaction, right? So the idea, ideally it should lack liquidity below. Okay, in this example, because we're in a bullish example, it should be liquidity below this order block, so there is no more liquidity, no more spikes, no more candle to be mitigated, like very similar like this. Okay, so ideally this example that we are watching here is a proper example of an order block, right? An ideal example of an order block. It means that this order block we're watching here, it's ideal, it's perfect, right? What is the meaning of that? I know you have seen certain situations like this in which you, for example, see like a double or triple top pattern and you start executing or buying because you see this bullish strength. But then look what happens. The price goes down, right? Now, when it goes down, you get a little bit fed up, right? Because you were buying. And now you see this bearish impulse. Now you say like, hey, you know what? I'm gonna keep selling because the price is actually having a selling reaction, right? But what you don't spot actually is that the price is just taking the liquidity of these lows, and now that the price enters into a order block. Now you also are not being aware that this is a strong low. And remember, if the strong low is not broken with a bottom of the candle, simply means that the price gets to a certain point and we continue in a bullish trend. So most of the traders that are not able to spot this put this type of orders, like selling orders. They start selling, having multiple orders, and then let's say coincidentally, it just there is a news, right? I don't know, a FMO talk, something like this. Powell speaks, Trump says something about China, whatever, and then boom, right? You're out. It happens multiple times, many times in our lives, right? As a traders, right? So this is a really clear example of how order blocks are very actually important for us, right? If you feel related to this and you want to understand much better the market, please do not hesitate to subscribe to the channel. And now accompany me with this analysis of the range liquidity and order blocks. All right, let's see. Now this is the theory, has been explained. It's time to see it in the real and actual market, right? So I'm gonna put this here so for us have the concepts clear. Mhm. There you go. And now we're gonna put the order blocks here. So these these concepts that I'm discussing here are actually perceivable in the market, and you, my friends, and me gonna watch it on the real market right now. Order order blocks. All right. So this is the theory we have that already clear. This was the previous class analysis. So I'm gonna keep continue with the analysis. Now we're gonna add to this the order block. Okay. Now, what time is it? Right. So we're gonna do back test at least for 40 minutes or so on, right? So stick to this class and grab a glass of water like me, and let's start. Nice. um. Right. So in last class, I was actually putting this order block, right? Um. All right. So now let's do the next. I'm gonna explain the concepts with this, and then we're gonna keep analyzing. So we're gonna ignore for a while the next. Look, even more, I'm gonna do the next. I'm gonna put this here. Start a new. Um, here. Of course, we already know the reaction, right? But we're gonna understand why the reaction goes to here. Perfect. So, some of you were talking, we were discussing, right? This, and now let's try to analyze. We last class we defined this as a strong high, and then we got this reaction. Now let's try to analyze the beginning of the range of this strong high, right? So we have a clear and obvious pattern. Yes, we have. So look the clear and obvious pattern. So we have here a low, then a high, perfect, then a low, then a high. With this high, we took the liquidity, and then we have a touch, break of the structure with a bottom of the candle, and then we need to break this low with a bottom of the candle, and this is what actually we do, or the price do. Sorry, the price does. Boom, breaks. So now we have the three confirmations: clear and obvious pattern, order flow. Well, now look at the next. In this example, we don't have order flow, right? But since it breaks this boss, remember that the order flow is optional, right? Well, we can determine that this is our strong high, right? Now, next, we have break the structure with a candle of the body. Yes, we have. And after the boss, we just do the example, the exercise of analyzing the pattern and see the the next confluences or confirmations we already did. All right. So this is a valid strong low, a strong high, right? So why the price did not respect this? Well, this is the reason why, and it's because remember that we said. Now let's go to the order block theory. So in the order blocks, if we don't have a range, we don't have an order block. Okay, so we have an order. We have this range, right? Now look at the next. Can you spot the order block on this range? There are plenty of them. Now, here is one, right? It is one order block. This is one order block. Here we have another order block. Here, right? Here we have another order block. Here, and here we have another order block. Here. Right. So if, for example, if you use in trading view some of those tools that are called order blocks, I don't know, order blocks, whatever, they will mark all the order blocks that exist. So there are plenty of them. So you're gonna get confused. Now, remember that these are the confluences we need if their order block is valid or not. So it says if you don't have an order, if you don't have a range, we don't have an order block. Okay. So we have a range. Perfect. Order flow. Do we have order flow? Well, in both. So for example, this order block right here, wait. This order block right here, this one is mitigated by this one, and it lets a new order block. So this is a potential or good order block, right? And this is as well. This is an order block. Then this candle enters here and let us a new order block, and now this is a potential order block, right? So we have order flow. It means that the valid order blocks are two, at least for this example. It means this one here and that one right here, right? Perfect. Now look at the next. Pre-trade liquidity. Pre-trade liquidity. So do we have liquidity prior these order blocks? In fact, number 3 and number 5, that it lacks liquidity below or above. Now look at the next. In this order block, for example, this order block, right? You have pre-liquidity, like a very evident liquidity before it reacts here. No, so we just have an impulse and then a very clear retracement. We don't have something like this that I would like to see. Like for example, it goes down, for example, right? For example, do something like this, let this high, goes down, let this high again, and all right, until this point, these highs become pre-trade liquidity, right? Because they are highs that can be mitigated with this impulse. But since it's not what is actually happened, it's just a simple impulse and retracement. There is no clear one. So this order block should be not valid, right? Now, this order block, which is right here, so this one that is here, does it have any type of pre-trade liquidity? Yes, it has. Look, from this one to this one, right? Here, this is, wait, this is pre-trade liquidity, right? I'm pretty sure you can see it here, right? There you have it, liquidity. So there are multiple highs, and this order block is not actually mitigated, right? So this accomplished that rule, the number 3. Now look at the next, number 4. Does it have imbalance? It doesn't have imbalance, so it's not a really good one. But the reason we don't have or take this as a clear order block is the 5th rule. It lacks liquidity below, in this case above, because we're in a bearish trend, right? So the same. But unfortunately, above this order block, we have the next. We have a lot of highs or a lot of liquidity, right? So all this liquidity that is above this high, well, it's just liquidity, right? So it's simply liquidity. And because we have this order block it doesn't have an imbalance and it has liquidity below of it, it makes it a low probability order block. Even though it may have a reaction, and it did, look, the price entered right here and goes down, right? It had a reaction. It wasn't a potential order block of continuation with the downtrend, right? And that is the reason why it was a low probability order block, right? And now the price gave us the reason, had a reaction, and then it was not respected, but it did respect the one which was above, right? And now this reaction, or this order block we have here, it does accomplish some of these rules, right? Which is, it has order flow. Look, it has order flow. It reacts from this block. Look, boom. It has order flow. Perfect. Now it has order flow, pre-trade liquidity. So this high was the pre-trade liquidity. Then imbalance. It has an imbalance. You can see this space here is an imbalance, or also this space here. Look, from this candle wick to this wick, candle wick. Also, this is an imbalance, and it lacks liquidity below above, right? Well, it does have liquidity right here, but, and this is when I said to you, we're just trying to understand the price and the behavior, not actually trading, right? But when we have this type of order blocks, we will wait here for confirmations in lower time frames, right? We don't actually execute order just straight away. No, we just need confirmations, right? So in that case, I will wait for a confirmation here, right? And we will have a certain reaction, right? And there's one question you may ask, hey Manuel, but you said if you don't have a range, you don't have an order block, right? Well, you're right, but maybe this order block is not a daily order block, or maybe a weekly order block, right? So that's why in a higher time frame, this is a valid order block. And we need to be aware that sometimes when the ranges are broken with above the candle, it means that they can react on an order block of a higher time frame range. Okay, and this is the behavior we have to keep executing and spotting. Right. So since we have done the exercise of first analyzing the price, and second actually see how it works, the theory, let's go in the market. And now I'm gonna keep analyzing, watching it, and continue with our analysis. All right. Perfect. Let's see. Right now we're gonna keep analyzing this high. We're gonna try to find first the range and liquidity. So range, here is the range. Do we have a clear pattern? Yeah, we do have it, right? Look, here is the pattern. Oh, shoes. Perfect. And then we have here a break of the structure. Boom. No. This one perfect. And now we have this boss. Good. Now, since we got this, okay, this is the strong high, perfect. This is our strong high, which is good. This is the liquidity. So this is the end of liquidity. And now when we got this, the boss, right? What is the exercise we have to do? So number one, we have a clear and obvious pattern. I know you can see it. We have order flow, clear and obvious. It's optional. We don't have optional order flow here. Breaks the structure with the candle body of the highest high. So in a certain moment, this was our highest high, and then they break it with the body of the candle. And after we have the boss of the market shift, we pull back and look for liquidity intake. Now, if you can see the next, right here, do we have a liquidity intake? So the price is actually reacting in an order block to determine this is our strong low. No. So in that case, what we do is that we go to the next evident market shift, which is this one, right? And then we do the same exercise. Now we're gonna try to find here this. So now we're gonna try to find a pattern of continuation. You know, what is the pattern we're looking for, which is the next. We have, look at the next. The price does this low, high, okay, low, high, low, low, continues with the low, and then it makes a break. Okay, so we have a clear and obvious pattern, right? Now, can you see the liquidity? Yeah. So is there liquidity intake? Yes, it is. Where is the liquidity intake? Right here. Boom. This is part of the liquidity, and also this one is a small liquidity intake. It's not the best. Actually, I don't take it because of this one. I take it because of that one here. Right, and now we're gonna see the next. Since we have already clear on the previous pattern, order flow is what we're gonna keep looking, and it does accomplish it. Look, boom, reaction in an order block, right? Actually, this is the order block. This green candle. Boom, perfect. Now, since we have this, after we have the break of the high, that's right. So now we can spot that this is our strong low, right? And this is what we're actually doing today. We're analyzing why the price is reacting and the reason why it is doing it, right? Boom, 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 boom. Strong low. Now look how interesting it is. Remember we were talking about the order blocks, if it is valid or invalid order block. Well, this order block was valid because of the next reason. It has liquidity above of it, right? Um, it was it was part of a previous range. So the previous range was from this point right here. Oh, this is the high of the previous range, right? So this order block belongs to a previous range, which is right here. We're gonna analyze it in a minute, right? So it was inside of inside of a range. So we have it. Then we have order flow, yes, pre liquidity right here, and you see that even it has some lows here and here. It can be considered liquidity, and it actually was liquidity. See, so it create all this liquidity, but since the price reacted here, it continues. So we needed a confirmation, but this liquidity later on time was taken. So all this liquidity was taken then with this. When in the early time frames, which is the time frame we're analyzing, it's what actually happened most of the times, right? Perfect. Now we already analyzed this break of structure. We have this strong low. Let's watch the previous strong low, which is this one. Now let's try to analyze next. We have a very evident ending pattern here. Look, this is the pattern. Boom, boom, liquidity X, boom, and then we have this evident pattern, right? Order flow, and this is what I'm trying to analyze in. But as you can see right here, this one cannot be order strong low. Why? Not clear reaction. It's not reacting to any order block, right? So we're gonna go to the lowest one. So this one. And we're gonna do the same exercise. So can you see the pattern? I do. Look here, here, high, low. So for those who are not watching it, I'm gonna draw it for you. Here it is. High, low, high here, low, right? And then it breaks with a bus. Good. Now this reacts to an order block. Not at all, right? Not at all. So we will force the we would force the what the pattern, and that's not right, right? So if this is not the strong low, we have to watch for the next one, which is this one. So I know you can see it has a pattern. What is the pattern? Liquidity taken right here. Boom, right? Then we have here a touch, change of a character, which is right here. Boom. And then we can say that this is a strong low. Yes, we can say why, because this is the highest high right here, this one, and it was actually broken with a body of the candle, right? Even if we like this or not, it's just simply a reaction. And now let's try to see if it reacts in another block. If it reacts in another block, it's a perfect example of a range beginning. Well, it didn't. You see, it didn't. Still, it's a strong low, right? Why? Because of the great impulse it has, right? Because of this great impulse it has, right? So that's the reason why I would take it, or I would consider it as a strong low. Okay. At the end, the order flow is optional, right? But it breaks a complete whole range, right? With this. So after this reaction, it was all broke all of this, right? Mm-hmm, mm-hmm. Right, let's try to analyze the next. You see this order block here, is reacting on this. Some of you may ask, why is this? This should be the strong high, right? Because it's the highest point, has the pattern of liquidity, and then it continues with the downtrend, right? Would it be this the strong high? So the highest high. Oh yeah, the strong high, because we were in this example in a better strength. Not actually, guys, to be honest. And the reason of this is the next. Um, since the price go down, right, and it did the pattern. I know you can see the pattern. Look, what is the pattern is here. Light tune took the liquidity of the high and boom, continues, right? The thing is that is with few candles, maybe in daily time frame we can say that yes, but if it is lower time frames, we wouldn't take it into consideration, right? Because of the with few candles, it's not enough, right? Few candles, it's not enough. Daily time frame maybe, but and also look at the next. It provides this, which is evident liquidity, right? So a certain moment, people would start doing the next. People execute orders with trend lines. So they put a trend line here, there. So they put a trend line here. Many people start selling at this point. That this spike is to take the stop losses of some people. Then it has a reaction just to provide people certain joy and say, hey, this is actually working. And then boom, it changes completely the direction, right? So since there is this high above this point, well, I wouldn't consider this this order block is not valid because, well, it has a range, definitely has order flow, yes, but does it have free trade liquidity? No, not at all. Look, this huge impulse goes down and then makes this, like this spikes, and they took it, but it's not enough. It should have a lot of liquidity, free trade liquidity. And not just that, right? Not just that. It's just because that it the lacks of liquidity, right? It doesn't have a lack of liquidity. It actually has liquidity low prior to this point. So this is the thing, right? So I would consider this one as a really or huge or new strong high, or actually strong high. Right, now let's try to analyze the next breakage, which is this one, boss. And remember that this is where you're gonna keep analyzing. So I'm doing the point number 4 of the range of liquidity. So after the boss, the market shift, we pull back and look for, you know what we're gonna look for, the patterns, right? So the most evident low is this one, right? Definitely is this one. And now what we're gonna actually do is analyze if he has the things, clear and obvious pattern. Yes, he has a clear and obvious pattern, right? I know you can see it. Does he have liquidity prior at it? Yes. Look, this beautiful. It was a very beautiful pattern here. All the liquidity was taken. We have the pattern right here. You know, look, high, and okay, low, high, boom. Liquidity has been taken. It makes this movement, which is normal and fine, just to confuse people. But then we got this boom boss, right? With a body of the candle. Perfect. And this is a good example for you to understand one thing. Anyway, first of all, let's keep analyzing the next. So clear and obvious pattern, yes. Order flow. Let's watch if they has order flow. So if we look the reaction, we look back and yeah, we have this nice order flow. Well, this one much better. Boom. Oof. Nice reaction, right? All right. So it accomplished it. And then break the structure with a candle body, yes, so the high gets high. After the boss, we have done the exercise, so we can confirm that this is a very clear and good, right? So we'll find that this is a good example of an order block. Order block, no, range beginning, sorry. There's nothing there. I wanted to find a tick, but let me do it. No, friends, I didn't find it. Haha. Mm. Oh yeah, good. Fine, finally. Boom. Took me hours to find it, right? Perfect. So this is a good example of a range beginning, right? So excellent. We have done it. Now look at the next. Look how interesting. Strong low. In the example I provided to you, we ideally waited for a continuation of the range, right? Or of the impulse. So when the price was here, many people were waiting for example, a continuation of a pattern, right? And this is the order block. Now, this is the next thing that you need to analyze, right? The price did actually have a reaction. It entered right here and continued pushing up, right? We will need a confirmation pattern, but. I don't know if you can spot the next, but since the price has this too close together, and also prior this order flow, there was another order flow. And it was more and more order flow. So order flow, it's actually very cool to find the beginning of a range. And when you know how to use it even in advanced level, you can use it to find continuation opportunities, you know, to keep buying, right? But when it gets this accumulation of order flow, order flow to order flow, The thing is that that mitigation, that balance of orders that we're actually watching right here, right? This balance of orders here, this balance, it's cool, but it actually causes a lot of accumulation of orders. So people just started watching these lows as a resistance levels, right? So people start thinking the price this is like a point of which the price will pivot. And this is also the reason why when the price enter here had a small reaction, entering a selling order block, and boom, take all the money of the people who were thinking these lows were resistance levels. And then it took the liquidity and continues with the uptrend, right? So this is this is why it's key, so paramount, right, to understand these concepts. And once we understand this, it's much better for us to perceive the movement the movement and the direction of the market, right. Right. So let's keep moving, right? I need to keep analyzing this. I need to keep learning more with you. Liquidity right here. I'm just marking here the end of the range liquidity, and then we have here a boss break of structure. Yeah. So this is the range ending. Right. So okay, we already understand all of this, and now we need to find again on the strong low, right? This is the exercise we have been doing during today's video, actual video, right? So now look at the next. We do have here a proper ending of a range, liquidity, boom. Do we have a range? Yes, we have. Look, this is how it ends. Boom. And then we have here a touch, change of character with a body of the candle. Perfect. And now we have the next, which is this. Boom. All right. So look at the next. How interesting. This will be our strong low. Yeah. Why? Because it breaks the highest high, which wasn't. This was the highest high. No, it wasn't. It was here. Well, then we're gonna analyze why. It was for strong low, right? Uh, look at the next. Look how interesting. So okay, let me check now. Again, let's see the steps. Clear and obvious pattern. Yes, it is. Order flow. This is what we're gonna try to analyze. Let's see. If we have order flow here, it means that the price, yeah, is a much bad, it's a more suitable range beginning, right? Boom. Excellent. So good. Has all the conflicts. Breaks the structure with the candle of the body of the highest high. Um, this is the one it's not actually doing, right? Oh, it did it, but phew, after years, maybe. And then we have the first one. The first breakout is the what is the charge? Yes, and after the boss of the microchip, we keep analyzing. Good. Um, in order to find the highest breakout, so number three, breaks the structure with the body of the candle of the highest high. The highest high after this, right after this react prior this reaction, sorry, was this one, right? Maybe some of you may say, hey, why don't you take this one? It looks like it's following the pattern, right? Let's say that yes, let's say that this one works, right? Why it works? Again, we have here a order flow, right? Order flow, and then it has a pattern inside of the order flow, right? But to be honest, guys, I would take it as a reference point, but it won't be my strong high. it will be my strong high. I'm gonna let you know why. Look, yeah, it takes a liquidity inside an order block, and they make a boss, break up the structure, so on, right? So as the price gets closer to this high, so here, um, I wouldn't take this as a reference point for because it lacks liquidity below, in this case above, right? Because it does have liquidity. Look, all these highs that you're watching here are liquidity, money trapped here, right? Maybe this order block, but no, it doesn't have imbalance. So maybe this one could be a reaction point, or this one is the one I like the most. So look, I'm gonna mark this one, but because this order block I'm marking right here, it has a liquidity prior. So all this liquidity, also these highs, and look, this is the reason why it enters right here, and this is the reason why if the price goes down, right, it causes this reaction, right? And you see, if this would have been our strong high, we will be trapped and we will fall on this liquidity here. But actually, the one was right here, and the real strong high is this one. So this is the reason why we need to be very aware about the order blocks, right? And the order blocks, because order blocks are paramount for the smart money concepts. But understanding when an order block works or it doesn't, um, for you as a trader, is extremely important, right? All right, friends. So let's keep analyzing. We have his here, this high here, perfect breaks. We have here a boss. Yes. Now, after we have a boss, can we say that it's reacting to an order block? Well, look, it has the confluences. Yes. Here, good. Um, good. Now, thing here is, would you determine this as a pattern? Mm-hmm. Mm-hmm. This has a pattern: high, low, high, low, high, low. It means that it takes the liquidity of this high, these lows, and boom, breaks it, right, with a bottom of the candle. It's fine. It's fine. It's good, right? Now you say, hey, Manuel, why this? That was our potential strong low. Didn't have a reaction like the continuation with a bullish trend. Well, there are plenty of reasons. So the thing here is that if you see the price simply goes up, right, which is fine, right? Now, would this be a valid order block? Well, the thing is the next. It is it, it hasn't arranged, right? It has order flow, yes, but it doesn't have pre-trade liquidity. These lows here are not actually liquidity. It's too few, let's say. It would be better if we have seen not this big impulse, let's say, but at least a better consolidation, maybe. For example, something like this. For example, it goes here and starts like doing something like this, going up here, right? And then start letting these lows, like it goes, make a retracement, a slow retracement. But this is a really fast retracement. It gets to this point, boom, goes down directly. So since it was that fast, it didn't create pre-trade liquidity, which makes this order block not that good. Also, it lacks imbalance, and since it was very close to this low, it causes liquidity here, right? Still, if you have decided to enter on this other block, we should have wait for confirmation patterns. Maybe we could have this, but then after a certain point, we will have to sell. So this was not a really valid order block, right? So since this was not, this of course low won't work, not a clear pattern. It has like this one has a clear pattern, right? Now let's try to analyze it once again. Pattern of liquidity. This is much more clear. You can see it, right? High, low, just okay, another low, high, perfect. Then we have here a low, another high, another low, another low, small high, and boom, with this low takes the liquidity of all these lows that it created. You see the difference between this and this one here? So here is not very evident liquidity, not that clear, not actually liquidity to track people. It was just simply it goes up and goes down, simple. Here is like, you see, has multiple movements. This is what I'm talking about when you see a real clear pattern, right? So perfect. It takes the liquidity of all these lows. Good, nice. And then we have here a break of a structure, boom, right here with the body of the candle. Nice. And now to make this even better, we're gonna try to analyze the actually is the second point, which is called order flow. Now in your second point we can see the next, which is the reaction on this candle wick or this order block, which is right here, the green candle, and boom, there you go. But you may say, hey Manuel, the price actually entered on this one, mitigates it and continue pushing up. Isn't this an invalid order block because of it? Not at all, because if the price re-enters again, respects the order block, and doesn't break it with a body of the candle, we continue buying, right? And also because this order block is backed up with this another order flow reaction here. What I'm doing here. So some of you may ask, all right, but didn't you say that the order block sometimes causes liquidity, and for that reason it can be dangerous? You are right. That's what I said. So that's why in these continuation patterns, we need to be aware of the confirmations lower time frames, right? Perfect. Now look, let's analyze this order block right here. Why this order block causes this huge and immense reaction? Again, let's analyze it. This order block is between a huge range. What is the range? It starts right here in this low and finishes in this high. So, or even here. Let's imagine it's just here. It started here and finishes here, right? Still is a really good, considerable, very evident range, right? Now look at the next. We also have an extreme of movement creator, right? But what happens? Since the price make all this liquidity, that after a second impulse, right, the price decided to go down and takes all the liquidity. Now you can understand what happens when the price has this very flash or strong uh, retracements and doesn't leave any free liquidity of the order block. It's because it needs to take the liquidity that was created. So what liquidity? All this liquidity that was not taken, right? So here plenty of people were buying, right away, and the price needs to make the price efficient. So that's why it goes down so fast. And now look at the next. This order block is inside of a range. It has order flow. Well, no, it doesn't have order flow at all. It's fine. It has a lot of pre-trade liquidity. That's right. It has an imbalance. Yep, look the imbalance right here. boom and boom. Yep. And it lacks liquidity. So below this low, there is not actually a lot of liquidity. It is an imbalance, and it is liquidity, which is this imbalance right here, right? However, it's still a valid order block, and when the price gets here, we just need it for a confirmation pattern. And when we saw this, the chart change of character, and have the price actually respected this one after reacting on this order block, and the continuation, well done, right? We're done. We spot a really an evident order block, right? Right, guys. So right, all right. Let's keep moving. So, mm, let's analyze this low again. Same story. Clear an obvious pattern. Can you watch the pattern? Yep, I know you can watch it. Here is the pattern. Look at the next. Up. So sorry. High, low, high, low, high, low, boom. Takes the liquidity of the lows and then boom. Pick up a structure. Excellent. Now this is the strong low. Now we see the next order flow. Does it have order flow? It has order flow. This is another example of what I was saying to you. It is that the next another block can be mitigated multiple times. In my experience, it can be mitigated 2 times, right? If it makes it even 3 times, well, we can start being a little bit suspicious about that order block because it may not work at all, right? In this case, it had a small reaction here, very a small one. This one was a proper reaction, and then we got the next one, right? But we just need to be extremely picky with the order blocks, right? Anyway, after this, the price make this pause, break up the structure, breaks it, and that's it. So we have the break of the highest high, the touch change of character, and that's it. So it provides us this as a strong low, and look how the price continue pushing up, respects this low, even created new lows, and also respecting them until a certain moment, and then it changed the market direction. So also, if you watch this, this is a daily time frame, right? But maybe in a monthly or even in a yearly time frame, this is a simple impulse, right? This is a simple impulse. Period. Goes down, boom, and next it continue with another impulse, right? So those are the waves, the huge wave, or those are the cycles. If you have listened to fundamental traders that talks or swing traders that talks about it, those are the cycles they're referring to, because definitely it's a huge cycle, right? Bicycle. No, I'm kidding. Right. We have already analyzed this one. Let's go to the next one. So all this liquidity was taken, as you could see. Even, even, oh, look how interesting. Look how interesting. Let's ignore for a while what happens here. So this, so from this point to upwards, right? I mean, all of this. Let's ignore all of this. So the price was pushing up, yes, on a bullish trend. After that bullish trend, look how interesting. Oh, we need to analyze the previous. Okay, so this is the highest high, right? And then we got this breakage with the body of the candle here. Once we got this breakage, right, we have to analyze potential order blocks of reaction. So this was one, but since it didn't have pre-liquidity, it didn't work. Then we got this one. We actually had certain reaction, but the one that worked the best was this one. So that's why the price entered here, right? So all these lows here, all of this was liquidity at certain moment. Like all of this was liquidity. The price entered in the order block, right? We have to wait for the confirmation. And look, the price had a reaction. It pushed up, but look at the next. With this impulse, the first impulse we're analyzing, it did not break this high with a body of the candle. So the price gets to the point, didn't break it, and just make a retracement. So those are warning signals, right? You start like well, actually saying, would this work or not? Would this thing work or not? But then it reacted again to liquidity of the low and boom, continue pushing up, right? Now, sometimes this is how the market works, and we need to be ready and aware about these movements. Right, we're about to finish our backtesting session. Um, let's keep analyzing another few lows, and with that, I think we'll be satisfied with the analysis. Okay. Right. So after we have this boss, let's try to analyze. Let's pull back and analyze the lows. So you can see this low. Would this work as a range beginning or a strong low? Here is reacting in an order block. So the answer is no. That's right. No. Why? Because we don't have a clear and obvious pattern. We just have impulse and retracement, no clear pattern. So we discard this one, right? Not this discard this one, right? We discard this one. So it doesn't work. This one, doesn't have a real clear pattern. So it will be this one, this low, the low of September 2022. Right, and here we can see actually very clear pattern, right? Boss, all the stuff, right? So this was the low, right? Now, actually, let's see if this low reacting on a previous order block. I don't know. See, I think this is the lowest, the historical low. Historical, yeah. This is the lowest the market has ever been. The GBP, the GBP, the pounds, the British pounds. This is the lowest they have ever been. It's almost a dollar, practically a dollar. Anyway, all right. Now, would this be our strong high? No, at all, right? We don't have a clear pattern either. It's not reacting on an order block, just having continuation of the downtrend. But this one, yeah, this looks much better as our strong high, right? Again, we're in a bearish trend, so again, boom, we have here the, oh Jesus, right? So we have this, we have a clear and obvious pattern right here, and we also have this breakout structure. So we can actually determine that this is a potential a good strong high, right? You see the pattern right here. It's here is this, so we have a high, low, boom, goes down, and then continues, right? So this is a actually good pattern. It's a good pattern actually. Nice, nice, my friends. Now we have to put here the order block. This is the order block. The price did not respect this order block. It went a little bit up and react even in a higher order block and continue with the downtrend or with the retracement, right? Good, strong high, nice example. Now we'll have to keep watching more strong highs. Now look at the next. Which was what is the strong high? Now imagine that we are located at this point, so from this point upwards doesn't exist. So sorry, which would be the strong high? So we have to do the same exercise, remember. So we go to the point 4, so the boss. So it means this one. Look, we analyze this boss here, boom, and then we analyze what are the lowest low of this boss. So this one. So do we have a clear pattern of continuation? Also order flow? No, it's not clear. Even though even this becomes liquidity. Too close is high, so close. In other words, liquidity, right? Liquidity, perfect. Let's go to the next one, the next breakage. I mean this one, right? So we have here a clear and obvious pattern. Well, let's say the next. We do have a pattern. Look the pattern. Here it is. High. Okay, the low. High. No, this high, low, high. Takes the liquidity of the high, yes, and then makes this boss. All right, it will work, and that's why it let us this order block. Right? Good, nice example. So even though or unfortunately this high wasn't or didn't have a proper reaction on an order flow, unfortunately. Still it works, right? And also the price went to the this was the ideal order block to be mitigated, so the price should have go up and continue. But what I have noticed on my experience is that in a downtrend, those movements occur but are not likely to happen because of the strength, because the crashes are super fast. When we have a downtrend, downtrends are super fast in comparison to the bullish trend, right? So we have here a reaction, boom, continuation. Excellent. Nice. Of course, this entry should have been by confirmation. We shouldn't enter there just because, right? Right, now let's try to analyze. Or strong high or strong low? No, I'm kidding. Question is, what is or strong high based on these aspects we have seen through the whole class? So I'm gonna mark them here for you so you can tell me what are they or what they are. So I have this one, number one here. This is number one. Good. This is the number two. And the number three. Tell him one, two, or three. Good. So you were right. The number one. No, I'm kidding. The number three, definitely. Why is it? You know, my friends. You know. You analyze the breakout. This one, right? Number one can't be. Even though it's an order flow reaction, you can see a clear pattern. Number two as well, we don't have a clear pattern. But in number three, sorry, we do have a very evident pattern. This one, high, low, high, low, high, takes the liquidity of the lows or the highest were prior this one, goes down, a reaction, and boom, breaks it with a body of the candle. Right? So we have a very evident pattern. Good. And look at the next. We have order flow here. Now you may say, hey, but it didn't actually enter. It didn't enter as we said. You can also take as a consideration the green candle. It may work as well. But in other words, remember that in higher time frame, like in this one, we're actually watching the price, which is daily, we can be a little bit flexible with the mitigation of the order blocks because they are huge, immense, right? However, in lower time frames like 1 hour, 15 minutes, 5 minutes, in it we can be we have to be strict, right? It's not like well, maybe no, it needs to be a really strict one. Right now, look at the next. Let's keep analyzing the strong high. Now, pay attention to the next. What is our strong high? Again, number one. I don't like to use that tool. I gotta put this tool for you. Where is it? No. Hey, okay, cool. All right, gonna use this too. I like it. Hey. And the crossbar. Of course, we do prefer the crossbar, right? Now, so what is the actual reaction? Number one, sorry, here. Number one or number two? Tell me, one or two? Hmm. I think I'm gonna use this one much better, right? This one is much better. Touch. Anyway, so number one or number two? Tell me. Number one or number two? Yeah. So if you said number one, let's try to analyze why it's not number one. Now we have here the break. Yeah, the boss. Excellent. Um. Now I'm sorry. Number one could be we have order flow. Yes. And inside the block we have the pattern, the clear pattern of continuation. So look, liquidity has been taken. Boom, very clear. And then we have a boss, right? Mm-hmm. So number one may work, but the thing about number one is that it's a continuation pattern, right? It does work. Don't take me wrong. It worked. Oh yeah, it worked. Yeah, it works. Look the pattern. It's a little bit more difficult to see, but it is. Look, low, high, low, high. So as I said to you in this video, I think so. Um, in higher time frames, we can wait for this, right? Can be flexible, but sometimes we need a more clear and evident strong high, right? Well, in this case, it may work. It actually worked, and that's why we just continue with this as a strong high, right? Nice. Now the previous one was the previous one a strong high. Well, because we're in a bearish trend, we have to do the same exercise once and over again. Maybe you get tired. Imagine myself talking non-stop alone because this video is with few views, but I don't care. I just want to practice. This is the thing. So we have the breakout, then we have to analyze this low. This low actually reacts on this order block, which means we have an order flow, evident and clear, perfect. Nice. Do we have a pattern? Yes, we have. Look the pattern. High, low, high, low, boom, liquidity has been taken, and then boom, a boss. Good. That's it. The thing is that after this decisional provide us a new continuation, and that's why it continued like this. But it was actually a good trade. Nice. What else do we have here? Um, nice. Right. So let's keep analyzing. That's why it was actually good, strong high. Good. Nice reaction. Done. It was at the strong high. Perfect. All right, guys. This is the thing. Today we're gonna stop. Okay. For a while we have worked enough, right? And now, yeah, we're gonna stop. So, friends, it's been a pleasure to work with you today. These backtesting sessions for me are paramount for me and for you. I think so. If you enjoy them, right? Because I can be better as a trader. You can be better as a traders that which are start. Maybe you just want to review some of the concepts, which is super fine. And if you really like this type of sessions, write me there in the comments if you really like what were the things you like the most from these videos and what you would like to see in another backtesting session or maybe a theory explanation, right? This community is growing, and the objective of this as well is to make the trading accessible for most of the people, but the real trading, right? Not the one which is there in the you know in the media. So thank you so much for being in the session, and I see you in the next trading session.